when you're acting in love, you're like a drop of water and you have the ocean as your army. When you act in fear, it's just you and your money. Now you could take your money and put it in Bitcoin, put a credit form, put it in cash, or all your cash, and then stand up to the ocean, and who's gonna win? We definitely are dealing with racism, but I want to push future concepts. You know, now I'm giving you two streams of consciousness in one. I want to talk about my wife. I also want to talk about Harriet Tubman on $20 bill.
We're following you. We're following it all. You set it up good. Okay.
That was the moment that I wanted to use Bitcoin, when I saw Harriet Tubman on a $20 bill.
So, on today's video, I will show you how you can make $1 million if you only invest $1,000 in certain cryptocurrencies, and how a crypto analyst, Benjamin Cowen, will show you how numbers can make you $1 million in the next bull run. So, stay tuned and let's roll the cameras. So I hope you're having a good day. This is me, Digital Digits, bringing a weekly video on cryptocurrencies. Before I start the video, please make sure to like and subscribe down below. So what I have right in front of your screens is the Bitcoin chart. Currently, the Bitcoin chart looks like it's forming some sort of ascending triangle because Bitcoin has been finding support at this green support trend line. So if Bitcoin doesn't hold this trend line, we could see Bitcoin retesting levels of 10,500. And I've said in my last video that it's very possible that we could test the lower trend lines and resistance before we reach higher prices in the near future. So I'm waiting for Bitcoin to break resistance at 12,000 or fall below this upwards green support trend line. So this is gonna be it for the Bitcoin TA. I won't make this video too long because I want to cover a section on how you can make 1 million by only just investing $1,000. So now let's look at a crypto analyst known by Benjamin Cowen on how he allocates his cryptocurrency portfolio, and also how you could also look at the numbers and also allocate your portfolio using these simple matrix and math calculations. And this could be a potential 1 million portfolio investment if you follow the correct math principles presented by Benjamin Cowen.
It's basically, managing your portfolio. So I've got a lot of questions on how do I pick my portfolio. But I'm not gonna exactly show you that, but what I want to show you guys is, how you weight it can make a huge impact later on. And I know that sounds like common sense, but we're going to go through about 15 or 16 different examples from the past market cycle and how you would have fared if you had weighted things differently. So the first thing we're going to look at is if you had invested $1,000 in the top 10 cryptocurrencies on November 15th, 2015. So that's basically, 4 years ago in the market cycle. And if we assume a 4-year market cycle, then we're basically at the same point. Now, obviously, it's not clear if it's going to be an exact 4-year market cycle, but let's just move forward with that idea for now. So if you had invested $1,000 in the top 10 cryptocurrencies on November 15th, 2015, and weighted them by market cap, you would have put this much money into each coin. Now, it might not add up exactly to $100 because all these are rounded. But it's basically, or $1,000, but it is basically $1,000. So you would have put, $923 into Bitcoin, $27 into XRP, $26 into Litecoin, etc. Now, if you were to just to do that and then you held it for the entire next 4 years, this is what your portfolio would have done if you had bought that $1,000 basically 4 years ago. Now, you would have peaked at $92,000, almost $93,000, and you would currently have around $24,000. So not too bad. I mean, given that it was only a $1,000 investment, peaking at $100,000 basically is 100x. I mean, that's incredible. So even just weighting by market cap is a fine way to go. It's a fine way to go. And people say, oh, you should weight it by market cap, weight it by whatever. But what we're going to do is we're going to investigate how we should weight it, because it's not always smart to just take other people's word for it. Let's investigate what is a good way to weight your portfolio. Is it by market cap, or how would we weight it by market cap? If we were to weight it by the square root of market cap, which means that basically it's going to minimize contributions to the larger market caps, and it allows you to put a little bit more into the smaller market caps. So we're weighting it by the square root of market cap. You would have put around $580 into Bitcoin, and $98 into XRP and Litecoin, and you would have actually seen a much better return on your investment. Now, obviously, this is not to say that it would happen again. In fact, I'm a big proponent of having, a decent portion in Bitcoin. But this is just, you have to weigh your own risk reward. And we're going to go into how you manage that. Not that this is financial advice or anything. This is just how I do it. Not to say, that it's going to ever happen again. But if you're looking into different ways of managing your portfolio, I think this could be this kind of analysis is really helpful for me, anyways. So you would have peaked if you had weighted it by the square root of market cap. You'd have peaked at $237,000, and which is really good. I mean, you basically would have done 2.5 times or so what you would have done if you had just weighted it by market cap, and it's pretty impressive as far as I'm concerned. And now you would have around $40,000. So you would have about $15,000 more if you had weighted it by the square root of market cap. Now, it kind of begs the question that, okay, well, if we weight it by market cap, we get X, and if we weight it by the square root of market cap, we get Y. There's got to be some optimal value. So what power could we raise market cap to such that it would have given you the optimal portfolio? Now, every coin in the top 10 has to be raised by the same power. So that's one key, because we didn't know which coins were going to do the best. But it's just a simple optimization problem. So I wrote a code to run the optimization on it, and it turns out that if you had weighted it by market cap to the 0.099649 power, this is what you would have ended up doing. You would have basically, it's incredible, you would have basically put around $100 into each coin. I mean, it varies. This would have been $159, this would have been like $82, but you would have peaked at $335,000, and your portfolio would currently be worth around $40,000. That's not too bad, considering that the optimal value would have actually been putting around $100 into each coin. Now, considering that, what if we did just put $100 into each coin? What if we forego all of this, complicated mess and just say, okay, well, I'm just going to put $100 in the top 10 coins and we'll see what happens? Well, if you had done that in 2015, it would have basically, as shown here, it would have given you basically the same thing. Instead of being worth $335,000 at the peak, it would have been worth $330,000, and instead of being worth $40,000 currently, it'd be worth $37,000. This is an interesting way to go. I will remind you again that this does not mean it's going to happen again. Does not mean that if you put $1,000 into the top 10 today that you will see these exact returns. In fact, I'm pretty sure it won't be quite this high, because each market cycle, as I've shown in some logarithmic regression videos, each market cycle gets subsequently less. That doesn't mean there aren't going to be some coins that completely outdo others. In fact, there will be, and there will be some coins that are going to do way, they're going to be much more impressive in their return, their ROI, than other coins. But this is, so far we've only covered 4 different scenarios, and you can see just how differently, depending on how you weight things, can make a huge difference in a few years' time. I mean, you can see the growth throughout these 4 different market caps, or weighting by market caps. Now, what if we had basically we knew which coin in the top 10 was going to perform the best, okay? And instead of that, actually, and really just saying what could we have done to maximize our peak value of our portfolio if we had $1,000 in 2015 on November 15th, where could we have put it to maximize our return? Well, it turns out that even though I allowed all of the top 10 coin percentages to vary, it turns out you would have done the best if you would just put everything into Ethereum. In fact, if you had put $1,000 into Ethereum on November 15th, 2015, it would have been worth around 1.6 million at the peak, and you would have currently had around $200,000 today. Now, clearly, it's hard to predict exactly which coin is going to take off, but it's impressive that $1,000 could have turned into 1.5 million, almost 1.6 million, and still 200,000 even today, and it would have just been putting $1,000 into Ethereum. Now, what if, and this is something I've spoken about on a lot of other videos, what if we weighted it by market cap, and then once Bitcoin reaches a previous all-time high, we take half of our Bitcoin holdings and then re-weight them into the other coins weighted by market cap. Now, I hope that doesn't sound too confusing. Picking the one coin that was going to give you this kind of a return is a little far-fetched, or it's way far-fetched. It's not going to happen for most people. It's too difficult to pick, like the coin and to put just your money on that one, because you could easily miss out. So again, what we're looking at now is, weighting it by market cap initially, and then when Bitcoin reaches its previous all-time high, which occurred in the first quarter of 2017, you take out half of your Bitcoin holdings and you reallocate them to the other 9 cryptocurrencies in the top 10, or that were in the top 10 back in 2015, and you reweight them by market cap. And it would have given you this light blue curve that you see here. So basically, it would have given you around the same thing as just if you had done $100 per coin. So, it would have been starting off with this 923 in Bitcoin, and then after after a couple years or a year and a half, whenever Bitcoin reached its previous all-time high, you would have reweighted it, and actually you would have ended up around the same as if you had just done $100 in each coin and never reweighted anything. Now, what happens if you weight it by market cap, and then once Bitcoin reaches its previous all-time high, you take half of your Bitcoin value and you know where to put it. You know exactly which coin is going to do the best. In this case, it would have been XRP. So if you had done that, if you had taken half of your Bitcoin holding after weighting it by market cap, then your peak value would have been worth 910,000. And your later on, it would have been worth around 82,000. So clearly, that's one of those things that is not.
So, investing or diversifying your portfolio according to your risk-reward ratio can also influence your returns on your portfolio. So, diversifying your portfolio is a good thing, and not investing in one coin could be a bad investment if your cryptocurrency fails. So, especially there are new DeFi coins now currently, so it's better to allocate some of your money, but a small percentage, to these small altcoins, so you can maximize your gains and profits heading into the next Bitcoin bull run. Because I think these small coins will also outperform Bitcoin in Bitcoin's bull run. So those were the thoughts that I have regarding Benjamin Cowen's